Greetings, everybody. It's Jeff Scott. I thought I would wait till Monday to do this, but based upon some of the discussions on the Hgsi board, I didn't want to force anybody to come to that one if they don't want to. I titled today, More New Highs While Coronavirus Deaths Increase. We'll see if I'm right or wrong. A couple weeks ago, I did say that I would play the market we have and not worry too much about the virus. I still feel the same way. Obviously, pockets like travel stocks, cruise lines have not fared as well. And if this keeps on going, there's certainly more and more risk that the economic downturn in China related to this could expand worldwide. I also pointed out, and I'll continue to think this, I've heard numbers between 14,000, 17,000 or more influenza A deaths in this country. And as myself and many of my listeners are over 60, I want to point out, as we're talking about coronavirus, the mortality or death rate in influenza A, if over 60, is 10% in the United States with our healthcare. Something to think about. God bless the people that are sick. Hopefully they get better and hopefully this thing goes away. And most coronaviruses do go away as we approach spring and summer historically. My name is Jeffrey Scott. I am an oncologist, which is a cancer doctor. I am not an investment professional. And my email address is hgsidoc@gmail.com. As always, it's for educational purposes only. Anything I recommended is in the spirit of education, not investment advice. I am independent. I have paid for every tool that I use. I don't take money from anybody to say good things or bad things about them. I don't share in anything that gets sold because of my promoting. I do this because I like a product and I want to help other people get access to it. Trading involves risk, and you alone are solely responsible for any investment decisions that you make. As I usually bring up, and I'll just glancingly mention, I've learned from others. Many of them are on this page. And frankly, I wasn't born a trader. I had to learn. And to me, education is necessary whether I want to practice medicine, be a good businessman, or be a trader. And I like to have employees in my office. And to me, my employees in my trading business are my indicators and trading platforms. Indicators do not make me money by themselves, but they may give me assists in identifying and maximizing an opportunity. I have a lot of software. Yes, I have a lot of spendable income, so I bought everything. I don't use most of the things that I have, which is a downside. I have to have TradeStation or Thinkorswim, and I rely heavily upon that for the indicators, including John Persons. I use Hgsi most of the time when I'm sitting and looking at charts, especially end of day. I don't sit at my computer 24/7. I trade off of daily and weekly charts. EdgeRater has automated a lot of the processes I do in Hgsi and helped me understand market dynamics. And then I use a number of other programs as well. Here's the website for Hgsi. I get no commissions, bonuses, or any payment based upon what you purchase. If you click free 30-day trial, you'll see the opportunity to sign up. And under investing strategies, you'll see hundreds of similar videos to this by myself, Ron Brown, and others. Where are we on the cyclical pattern? Man, every time it feels like we're rolling over, we take another leg up. Broken record, we're there again. We're not overstretched yet, and it's almost as if instead of rolling over on the shoulder, we just keep going up at a 45-degree angle, and every time we get a little extended, we get a pullback. Right now, I can't say any differently. Since I'm not sitting here in all clear, buy everything in sight land, I'm more in the uncertainty. I have raised cash and have smaller positions. I've sold some premium, and I have some protection on. That protection clearly hurts my performance. My performance is fine. I sleep at night, but I'm sure I've given up 5 or 7% gains this year because of money I've spent on volatility instruments, gold instruments, and contra ETFs, as well as puts on my major positions. If I can maintain the performance I do and sleep at night, it's worth it to me. It's similar to buying disability insurance. I was never disappointed that I went through a 20-year career of being a doctor and never once had to use my disability insurance. Unlike the last two Fridays when the sector review showed a sea of red, you can see in certain sectors such as utilities, everything looks like it's green. Real estate looks green, staples looks green, and pretty much mixed everywhere else. Clearly a defensive posture, and it's interesting seeing rising highs in the setting of defense, but as you'll see, it's not just defense that is working. If we go into my Thinkorswim charts and I make it maximized, you're going to see futures here because futures tell me what's happening at nighttime, not just what happens during the market days. And you'd be amazed how many times the big market sell-offs have already occurred when the market opens. You see a gap on a daily chart, but on the overnight futures, you can actually see the bars as they occur. Couple of things about this chart. If you wonder what a lower left to upper right is, this is a lower left to upper right. You see that in the setting of a very bullish move. This is 1 year's time, and you could see the low for this period of time was back in March, and the high on this daily chart for the E-mini, which is the S&P futures, or I'm not sure it's a mini, is the high was seen on Friday. It's really hard for me to say the market's selling off at this point. We're setting new highs on the E-minis, or the E-futures. On the NASDAQ futures, exactly the same except the prior low for the year was in June. We are at all-time highs, strong volume, hard to be bearish. I'm a realist, but still hard to be bearish. This one looks a little different. This is the Dow futures, also a lower left, upper right, also a day beyond the high of the year, but a lot looser in appearance. The Russell, I think I went to futures this week. Let's see what I have here. The RTY. Now, again, the high was set earlier. It was set in January. But if I just quickly switch this to a weekly, I just want to point out that unlike the others, the all-time high on the Russell is still back in 2018. So the others that I've shown you have now set their all-time highs. And each of them, they set them this week. So the Russell is clearly the laggard, although it's been strong of late. It's a pretty good move off of its bottom. The VIX, if the markets are strong, the VIX should be low. And the VIX had a run up the prior week and last week, or on Thursday, but Friday sold off, although it's above where it usually ends up. And then the dollar, in the setting, I think, of the China fears and a rush to safety. So not only do you buy defensive stocks, you also buy dollars. And you can see the dollars had a big rally over the last couple of weeks. Now, I could do this for weekly charts, but in the essence of time, new highs are new highs. Let's just go back here, and you can see on the weekly charts just what LLUR looks like, how the Russell is different, the VIX is sideways, and the dollar is breaking out. We'll see if that maintains. What's underneath, you can barely see a nubbin here of the interest rates. They sort of moderated this week up a little bit, but really not much. The spread, which is sitting where my pinpoint is, narrowed a bit on the 210, still well above inversion. The AD lines are at all-time highs on both small stocks and large stocks, and you can see how the small stocks in red are trying to catch up with the AD line. The big stocks are already there. If I look at the NYSE AD line, here's a list in the upper left-hand corner in color of the various ETFs. Even bonds, despite the moderation, were up this week. You see that right there. So this was an interesting week. Dollars up, bonds are up, and so is the stocks. Breadth, stronger, but not overbought. So we've gotten as high. These are stocks above the 200. It's getting there. It's not at the highest. Stocks above the 40. And the short-term one, the 3-month new high, new low, we're probably a week away, or could be 1 or 2 big trading days before we're getting to a point where a reversion to the mean is likely to occur. Now, the daily McClellan, we got new highs, but no new highs on oscillator or summation, same as on the weekly. So those divergences, which we've seen forever, remain and are sort of the salt in the open wounds of the bull. Looking in EdgeRater, the buckets, I'm taking the S&P 1500 as listed on January 5th. I update it every quarter. This is data as of 2/14/2020, and this tells me that 60% of the stocks in the S&P 1500 are above their midline. This here tells me that very few are below the Bollinger Bands, very few are above. No signal here, not overbought, not oversold. That looks like a strong market. We've had Hindenburgs this month, but we haven't had them in the last several days. So despite the fact there's been some volatility, although we haven't seen a big sell-off, I don't see an imminent concern from this chart. Market tone, this actually surprised me because the last couple of days I sort of limped into the finish, but first couple of days were very strong in the week, setting all-time highs for me. And you could see that for the most part our indexes are green. And if we look at commodities, except for staples, which is defensive and have been lagging on the sector strength rather, not commodities, you could see the sectors are strong as well. This also surprised me. We watched the canaries, and as I look at this, we're at new closing highs. Here's a list of the canaries. Yes, Priceline is bookings. Not all of them work at a given time, but most of them are working now. And not only are we at new closing highs, we are near all-time highs. That's got to be bullish, don't you think? And then what about my topping index that I put together January 19th that had a pullback, and as we said several times, down, bent, but not broken. And lo and behold, new highs on my index support higher prices ahead. Know your news. On the left, I look at the news. I see a lot of Fed heads speaking, but not a lot of market-shaking news. Yes, we'll have jobless claims. We got some PMI, producer pricing index, but I would say that's a modest at best week of news. Earnings. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I see a lot of stocks here. Fortunately, not a lot of them are mine, so I'll have a little bit easier week. I had some major wins, Amazon, Netflix so far, Shopify. I had some major losses too. I had a couple of things that just went the wrong way. Still made money, still doing all right for the year, but you've got to know when your earnings are, and typically I'm putting in other positions right before earnings to mitigate. I'm paying a tax, but I'm mitigating getting hurt. Markets continue to climb the wall of worry despite escalating fears on coronavirus and continued U.S. political discord. I probably should add, and continued HGS board discord ever since I introduced the recent indicator package, of which I make no money on. Chinese government has stepped in with more economic stimulus to mitigate. The NASDAQ and Russell led the markets up 2.2 and 1.8% respectively on the week. Larger caps closer to 1%. Yes, I'm a braggart. My wife tells me all the time, but I've said it before. Why would you want to listen to somebody who doesn't make money? Here's the indices. I'm up 39.8%. What's the proof of that? Well, when I started this year, I said I'm going to have 1.7 in my starting in my trading account. This is live right now, and if you start with 1.7 million and you're currently up $678,000, do the math. It's 39.8%. I'm not lying. I'm not selling you anything. I'm not making any money on you, but I think it's good to know that you're at least listening to somebody that has somehow figured out how to make money in the thing called the market. And that's a real money account. That's not a paper account. Many of the leaders look extended, and there are fewer and fewer great setups on the remaining. Plus, I have to point out to myself that a lot of what's remaining are laggards. Market's likely to continue inching forward as earnings season continues. I remain long. As I've mentioned, I have protection on. I learned from Ian the hard way not to play chutes and ladders, although he called them snakes and ladders with our money. Don't let it run up and come right back down. I remain willing to give up some of the gains going forward to protect the profits already booked to date. I have another live webinar on Tuesday. I will review the market. I will look at some of my other tools, as well as Hgsi, and then I'm going to make the case of why I use the person indicator package, why I use my money to get it installed into Hgsi, and why I think it's a value. Now, it is not for everybody. I am not changing what I do. I've been using these new indicators for months in my webinars. I'm not going to change that. I'm not going to block my webinars. It's none of my business whether you buy them or not. But I'll tell you one thing, if I put something up and I talk about it, even if I don't make money on it, I'm committed to making sure if you get it, you succeed with it. So I'll continue to do my videos to help support that, and I have a number of sessions to help the purchasers to make sure they find value in what they purchase. This is a tiny URL version, https tiny URL hgsi.person. There's also the link will be in the emails or attached to the YouTube site where you may have gotten this from. So let's go and look at my top-down review. Now, I made a comment this afternoon on the Hgsi board about how, although sometimes this is laughingly absurd, the things that people are putting there and the attacking back and forth, which is mild, but there's some undercurrent. But it's exciting because I haven't seen this much activity on the Hgsi board. Now maybe we can move that into something more productive, but it's glad to see there's that many people looking at the board and, frankly, the Facebook site. So where do I want to start? Let's just open up TradeStation. And I always go into this, I call my market force and divergence page. On this page, for those who have gotten some of my indicators, because anything that I do, I've shared freely at my live meetings, and I share things that I've paid to develop. I don't share things that are proprietary to anybody. I don't share things that are copy protected. On this page, we have e-minis, daily, weekly, and monthly. I've overlaid on them the Alexander Elder Impulse Indicator, which colors the bar. Down here is it's coloring the next, I believe it's the next higher time frame. The red dots that are occurring on top of the weekly bar, that's a MACD divergence awareness dot. It doesn't tell me there's MACD divergence, but it suggests that if I go down here and look at the Elder MACD, despite higher highs, I don't have higher highs on the MACD. That might suggest reducing participation in that instrument, and perhaps it's going down. The arrows are from John Person's TradeStation lifetime package. They are, to me, a trend signal change, but also a buy-sell indicator. Green is a buy, red is a sell. You'll notice on the E-minis, we're at a buy on the daily, the weekly, and the monthly. On the Elder Impulse Indicator, when it's green, I can buy it or hold it. I shouldn't be shorting. When it's red, I should be shorting or holding. I shouldn't be buying. When it's blue, it doesn't tell me anything. Blue, green, green. These are the Alexander auto envelopes, the Elder auto envelopes. I am up at the top, but I've learned over the years it can ride the top for a long time. When I get a big move above or a big move below, usually you have a reversion to the mean. Down here is the MACD. We don't see dots there, so I'm not going to even bother looking at it. Down here, something that I've shared with folks who've attended my meetings is the Jeffrey version of the bongo indicator, which is something that I actually was part of the teams that invented. So there's no IP protection to me. I invented it, so I freely give it away to folks that attend my meetings. Daily, weekly, and monthly. I paid my own money to develop it, but again, there's no IP protection, so I don't mind sharing it at the appropriate times. When I look at this, this tells me in 3 time frames I have a bullish trend. This thing here is a adoption of Ian's high jump indicator, where I'm able to look in this here 97.30 and know that the extension today in the E-mini futures is higher than 97.3% of the other days in the last year. When I start to get extended, that should tell me that I'm starting to get overbought. Well, we're getting there. Markets have a tendency, however, to get more and more overbought. So we're at a buy signal and 3 signals. We got a blue bar here, which sort of not surprising considering how I limped into the finish on the week. Green and weekly and monthlies. The one thing that bothers me on the E-minis is we're starting to get extended. When I look at periods of time where we may have topped before, like here, this number was the day before I want to look. The day before was 95.77. Here we're getting, this was the high. We were at 94.93. Here was another high, 93.46. So we're getting kind of high and kind of extended. Like you didn't know that already. If I look at the Dow futures, I see the MACD divergence is showing up here. And of course, if you look at this high and these highs, clearly higher highs. But the MACD here and the MACD down here, you have a bearish divergence. We still have 3 bingos that are green here. We're at 91% on the high jump bar. We're in buys everywhere. Again, still bullish, but extended and starting to get a little bit more concerning. The NASDAQ futures, well, we're at 97% there. That's probably the most important thing. Everything else is bullish as all get up, but at some point we're going to reverse. And the same thing, I can go back and look at here. I was at 100%, and the next day I rolled over. I was at 95%, and the next day we rolled over. I was at 93%. So we're at a high number. It can get higher. If I look at the laggard Russell futures, not at all-time highs, only at 82%. These look extremely bullish across the board, the caveat being the market is extended. You already know that. If I go down and I try and find the dollar here, if my eyes will adjust, I told you the dollar is strong. Boy, is it strong. To the moon. Now it's got some divergences coming in on the MACD and the weekly. It's at 90% on the high jump bar. If the dollar is strong, shouldn't gold be weak? Gold went sideways. That's to me is almost a divergence in mentality. If the dollar's up, gold is weak. How's everything up this week? This is a strange week. So is that defensive? I don't know. Maybe the dollar is felt to be a shot in the pan. Silver is sideways. So that's kind of interesting. Now let's go look into Hgsi. I haven't updated Ron's fine updates to his thing. That's one of the great contributions besides his videos and his very fairly priced, which he's going through now, web courses. One of the things that Ron Brown has brought to the crowd, to the group, is his indicator sets. Started with him and Ian years ago. And I don't know, I mean, it saves me a lot of work because he does the work for me and he creates his add-ons. So I appreciate that. And I could tell from the board, there's a lot of love for Ron Brown, and I hope his health continues to do well and he can continue to be involved in the board. I've got 26 things here. I added a momentum S&P 1500 ETF because clearly that was making a difference of late. Momentum stocks. Let's go to my top-down view. So let me now go with some negative news. You'll notice that I've been using indicators that you haven't seen on your computer. I respect everybody's desires. You can get John Person stuff. You don't get, I don't care. I'm not going anywhere. I'm not going to like you less. I'm not going to like you more if you buy it. It's irrelevant. But I'm going to trade the way that works for me. So I started incorporating weeks ago into my current views a number of John's indicators. I'm not going to take them out because I got backlash for bringing this to Hgsi. I'm still going to keep them in there. Those that subscribe to the John Person indicator will be able to duplicate my views. Those that can't, it's no big deal. You just use my older web views. It's not a big deal. So I'm going to start with the top-down analysis views. And the only thing I did differently here is I brought up percentage index. Well, these aren't necessarily index, they're ETFs. But I'll show you what happens when I put some industry groups in there. So I've got 26 groups. Top down looks at pure price and volume, heavily weight Friday, a little bit for a week, and just a teeny bit for 3 weeks. Mid caps, NASDAQ up at the top, gold, utilities, commodities. Now what's really weird, I showed you how strong the dollar is, and those things are still strong. Transports, volatility, treasuries, gold down there. Gold miners weak, gold strong. Seen that over the last number of weeks. Don't really know. I mean, I'm not smart enough with gold and not a gold bug to tell you what that means. It's just something I've observed and I've heard other people mention as well. So let's look at some of my favorite cash markets. So this will not be futures. This will be the markets or ETFs that represent the market. So we'll start with the S&P 500. And I'll start with my high, low, and medium road scenarios because I do that personally. And I'm going to look at it with, I'll use this one. New JAS plus person market catcher. So what's new on this is I've been using the new buy sell indicator. That's this bar here. And this is the person market catcher. Other than that, you have exactly what's there, even if you don't purchase the add-on. All I've done is taken my prior weekly with the Chris White S&P indicator, which doesn't do anything on the S&P because you're comparing it to itself, and I added to it the person market catcher and the person buy and sell signal. So again, what you have works just fine. You're not forced. I'm not even encouraging you to go out and spend your money. That's a personal opinion. So as we know from the Thinkorswim, we hit some new closing highs this week. New intraday close on Thursday, closing high looks like on Friday. The PMC is lagging, so the relative strength, but this is the S&P. I'm not going to make much of it, but it's going to slow down, and clearly you had a couple days where it looks sideways. So what's likely to happen from here? It's pretty simple. You have 3 things. Learn that from me and Woodward. The market could be bullish and to infinity and beyond. That would be nice if you're long. I'm not sure it's most likely. It could be very bearish, and certainly a pullback to the 50, the 17, or a pullback to the 50 would not be considered a major thing. And then whichever it does, to bounce around a little bit and digest these gains. That's probably the middle road scenario. And then the low road scenario is, man, we haven't been down that 200-day moving average, heck, since June. Maybe it's time to go visit the 200-day moving average. That would be my low road scenario. To me, I'm expecting us to do one of the first 2 scenarios. That's where my portfolio is sitting. So here's the box that I think we're going to be living in. It'd be nice to break out of that box and then we have a new box on top of that. Maybe that's what will happen on Monday. But right now I want to see what happens. But my guess is we go higher or we go sideways here. I don't see a big pullback, but if something happens with coronavirus, that's certainly possible. In longer term, I remain very bullish. S&P 500, therefore, looks pretty darn good. If I go down and look at the Dow Jones Industrial Average, it looks almost exactly the same, and it does. Can't say anything different here. If I go and look at the NASDAQ, this will look a little bit stronger and still in an upward trajectory. Look at the bullish close on Friday. Look at the strong person market catcher, the Chris Wilson indicator as well. Super, super strong market. And this is where obviously the Teslas, the Amazons, the things that are really doing well, many of them are based. And if I go down and I look at the Russell 2000, talk about boxes. Here's one that is really going sideways. And, it would not necessarily be the worst thing ever for the S&P 500, frankly, to take a break and mimic this with a little bit of a sideways move. But I'm happy to be bullish, and hopefully it goes higher. To me, the Russell's right now in a sideways congestion, which is not necessarily unhealthy for that market. If I want to go and look at the dollar, we know it's strong. Just to show you an Hgsi, it's racketing up. It's not back to its congestion from the last year, but it's had a fairly significant move, and you can see the PMC has moved up. I use that PMC when I look at things at double tops, double bottoms. If I see things that are throwing the high jump or the low jump, and I see some bullish convergence, it's also very useful to me. If I go down and I look at the VIX, we talked about it on TradeStation and Thinkorswim, or I think on Thinkorswim mostly. The VIX is resting now, not down to the lows it's got, but it's come down quite a bit. And if we go look at gold, talked about how gold has stayed pretty steady, and you can see that here. Gold, to me, it looks very, bullish. If I look at silver, it looks less bullish, but still above its moving averages. And then, I guess what's been perplexing, the gold miners. Looks a lot like silver. Maybe it's because it's more than just gold. Now, if we get a shocker on coronavirus, if I and many of the pundits are wrong and it becomes a much more widespread and bigger health problem, then all bets are off. Then you get a pullback in the markets and gold goes higher, the dollar goes higher. It'll be interesting to see. Hence why I continue to have some protection in the market. I know what I think will happen, but I'm not necessarily willing to put my family's financial future all at risk. If I move over to industry groups, well, that's not the way it's supposed to work. And let me just go ahead, pause it for a second, and update all my indexes. All right, that's more like it. So now you can see with the percent industry group in a buy-sell versus a sell signal, I can actually look at the industry groups and get a sense of what the overall industry picture is. It doesn't tell me when they went to a buy signal on an individual stock. It just shows me the individual stock, which I find that to be interesting. I'd rather be buying things in groups that are doing well than not. All right, I just saw another of the many notes on the board, and I was thinking about it. So what I like to do is to go 2-day force, and I don't know if I did that in these yet. Let's see. I've got so many views, I have a problem here. I'm going to have to fix these views before I share them with anybody. I know I told some people to come out tonight, but they will. So I have done this one, good. So here what I've done is I'm looking at 2-day force, no different than I've ever done. The only difference here is you could see how many had a new buy on Friday, a new sell on Friday. This would be the current or last market date, depending when I did the upgrade. And then what the overall percent. So this is interesting. Semiconductors the majority of them have sell signals here. We had a lot of sell signals on Friday, yet their 2-day force is that's down. No wonder. Hello. 2-day force up so we had 28 to the downside, 38 to the upside. That goes with a modestly bullish market. If I look at 5-day force, I've got 58 to the upside, and 5-day force down, I have 29. So I wouldn't say it's an overwhelmingly bullish market, but when I have more up than down, that's a bullish finding. So REITs, 17 new buys on Friday, 8 and 10 new sells. 72% of the REITs are in a buy signal. If I right-click on the REITs, change index group, and I hit this button to take my thing up to the top, make sure I'm ranked by combo, which I am. Now, I like to look at forces, momentum, and look at the things that are making momentum. So Digital Reality Trust is the first one. Now, when I double click, it should be listed Digital, Equinix, Taubman. And if I look at it, it's Equinix, Taubman. You may all want to check that from time to time. If it goes in alphabetical order, you probably have to double click again. So here is Digital Reality Corp. What do I see? The little box tells me I'm in a high closed doji on the weekly and on the daily. My market catcher's outperforming. That's true. I had Kahuna's person buy signal. Pocket pivot. It's in a buy signal. No squeeze. Yeah, it's a nice looking chart. 3.3% dividend. I would have no issue with somebody buying this. I'd rather buy something before it breaks out. So, as I think you always have risk that it's going to double top here, and that's about 6 or 4% away, a little too short for me. Equinix, beautiful run, and then it just changed going into sort of a climax run, perhaps. Again, I would have no trouble if somebody told me they wanted to buy it. Great earnings per share growth. You could see down here the statistics of 17 new buys, 10 new sells, 72% of the stocks in the group are positive. They're going to be the same for everything in that group. Beautiful chart. Again, to me, it's gone. Look at the high jump turning up almost vertical. Taubman, this was a buyout. You can see the dots, the lines up there. Welltower, I like this one. Why do I like this one? Well, my PMC has been going up, so it's not really bullish convergence, but it's certainly supportive because this was also trending up. I had a Kahuna, some pocket pivots, and a person buy signal, and a mobile breakout. It pays a 3.9% dividend, and to me, it's got some room to go before these prior highs. Not a lot, but a little bit, and I might be interested in Welltower. Sabra, probably more interested. If we want to say that you've had your lows have been around this area, your PMC is certainly supporting a higher move. You had a new person buy signal, mobile breakup from a squeeze, pocket pivot in Kahuna. So what's different with me liking this today than me liking it 2 weeks ago? Well, first of all, I had the person indicators on TradeStation already, so I would have looked at it. Nothing. It's still a good chart. It's consistent with what we've always done. And you'll find Sabra on my list. We may go back and work up how I might play Sabra. Crown Castle International, it's already run a lot. Now, what I like to do here, this isn't the same. Crown Castle is a tower company. This is a digital reality where a lot of the servers are for the cloud. Okay. So here you have earnings per share growth, which is good. It pays 2.8% dividend, which is good. PMC is supportive on the daily. Nothing wrong with this. Not my favorite of the group. I did like Ventas. Ventas, senior housing, medical office buildings, life science and innovation centers, inpatient rehab. With an aging population, those become good. I'd have to do some review of why it sold off. But the stock has gone sideways. The PMC has gone from very negative to neutral, and now it's lagging, but it's lagging right into the zero line. You got some bullish convergence there. Mobile breakup from a squeeze, a Kahuna, and pocket pivot. This looks interesting as well. Plus a weekly high close doji, 5.3% dividend. So I could go through this list, and I can tell you that there's a lot of strong looking REITs, and you'll see that on my buy watch list. Next one down is internet and retail sales. I own 2 of the first 3. I do not own any Expedia. Expedia had earnings come out. You can see the next earnings are not to May. And it had a buyable gap up sitting right on the 200. That's interesting. But that was a big move, so I probably would wait and see what it's going to do. Speaking of big moves, we'll get to that one. Here is one of the ones I talked about last week. Now, I didn't play this one perfect. I did buy it down here, And I was looking at this here going sideways, and I actually sold some 150 calls against my position, and then bought some puts underneath. So the calls and the puts will pay for themselves. The problem is I'm going to get this called away. It had great earnings, so I made money on the position, but because I played defensive, I won't make the maximum profits. That said, I put money in the bank and I get to sleep. Will I continue to chase this one higher? I look at the earnings per growth going forward, I get a little bit nervous. But impressive move, impressive day on Friday, and made some money, could have made more. Shopify. Yeah. Wow. Talked about why I bought it here. Could have bought it anywhere down here, multiple signals. Could have waited to here when it broke above the moving averages with the mobile breakout coming out of the squeeze. All those would have been good buyouts. The stock traded up to close to 600 on Wednesday. Let's see, the high of the day was close to 600, right? 593.89. It was a huge move. It was a 100-point move. I had a couple thousand shares, although I had sold calls that I never thought would get called away, and they were. I ended up selling calls after the move up at around 580, so made a few pennies on those. But wow, what a move. Whew. What a move. Would I be buying it today? Maybe. Great. This is the anti-Amazon online shopping company. They provide logistics, technology, and support of small retailers throughout the world. Seems to me somebody might want to take them over someday. GoDaddy, Bible gap up here after earnings. SVMK, another Bible gap up, probably after earnings. Should I have been in this? It wasn't that exciting looking, and I don't try to enter right before earnings. Booking and match. This is actually something important to show. I know one of my young employees, I don't know if he's 30-something, bought some of this. Hopefully he'll use it to pay for a nice engagement ring for his girlfriend. This was a great buy right over here. A great buy there. And if you look at why, it could have been anywhere in this 3 days, but I never buy during the day, so I always have to buy it the next day. Mobile breakout from a squeeze, a break above the 50-day moving average, a pocket pivot, kahuna, a new person buy signal. And as we talked about, I showed you some examples of my trades. You got your price coming down and you got your PMC going up. You got bullish convergence. Now, growth stocks. Ian used to say they go up like rockets and they come down like rocks. They came down like rocks. So you have to trail these things. You have to be careful, and you can't forget about them. And this one had a reversal. You have plenty of opportunities. I don't know if he got out, but in this area right here, and then boom, back down to where it started. Be careful holding. These are not investments as much as they are trades. But when trades become an investment, that's okay. Nutanix, I looked at this a couple of times. I couldn't convince myself I wanted to buy it. There were plenty of other things I saw. PAGS is another one that looks very tempting, but it failed at the 200, so I don't think I want to buy it until it failed once, it failed twice. I'd rather see it get above the 200 before I start chasing it. So top-down review is going through the top groups in each top stocks, each of the top groups. Slack, sometimes you just don't want to believe your signal. So if you look at this, and I'm kicking myself in the ass, excuse my French, I've got clearly a base there. And clearly I got this thing occurring here. And here I had a kahuna, a person buy, a mobile breakout. I should have bought it. I didn't buy it. I look at the weekly now. I don't think it's too late to buy this. I'm going to start looking at some slack this week. Now, I am also aware that it's had a big run, and it'd be nice for it to come down before it takes off. But I'm going to look at slack. It's on my watch list. In structure, no, it doesn't look that good. Paycom, I owned this a long time ago. I wish I would have never sold it, but that's bygones. It's pulled back. It's bounced off the 50. If you own it, I'd hold it. I'm not sure I'd be chasing it here. It's really expensive from a multiple perspective. Adobe, talked about this as another one of those examples of stock going down, PMC going up, bullish convergence. You can say it's going up here too. And a lot of opportunities in this area to buy. And I don't chase. Right now, you'd be chasing it. HubSpot. I just don't see anything very exciting in that chart. Here we go into it. I guess you got to be a little bit more creative here, but a little bit of a bullish convergence, and that one's gone as well. I said in my opening statements, a lot of stocks are extended. These are extended stocks. How do you buy these? Here's one that's not extended that I am probably going to look at this week. Viva, technology involved in life sciences, clinical trials, etc. You have a chart that is kind of going sideways. And you got a PMC is starting to change. I'm interested in this. It's on my buy watch list. A lot of positive reasons for it. I don't like the fundamentals when I look at those growth rates compared to a multiple of 100. C continues to run. I already have a position here. I wouldn't open a new one. A lot of stocks have had big runs. Much easier to find stocks after the market reverses. Speaking of big runs, Microsoft had a one-day reversal here and then sideways. It's an expensive stock. Would I be buying a new position here? I own some. I'm not adding to it. I'd rather buy it on pullbacks. ServiceNow, I remember I gave this to one of my neighbors, and we're both still riding it, and you got that pattern. Got bullish convergence. Do you need this? No, you don't need this. You got a stock that's pulled back. It's broke above the 200. And you had a good buy opportunity in here as well. Interaction, interested in this one as well. I don't know if I made it to my buy list. Lower left, upper right-hand corner, relatively tight. Pocket pivot, mobile breakout on Friday, and a PSER reversal. So I typically go through the top 10 to the upside, and then if I think the market is a likelihood of reversing, I might look to the downside. This is not a market that I'm expecting a rapid rollover, although I certainly could be wrong. And then I end up with a list of stocks that I'm going to watch to the buy side and a list of stocks that I'm going to watch to the sell side. So let's look at the buy watches. Let me show you what I mean by that. So I'm going to close. I'm not going to close those yet. So here's a list of stocks. Let's look at industry groups to start with. A lot of REITs. Renewable energy, specialty pharma, one biotech. Now some of them have problems. Like I really like this one a lot. Vulcan Materials. Why? Well, you've broken out now, but you clearly had an element of falling price and bullish convergence here. No question about it. You had a new buy signal come in, a new pocket pivot. The problem is it's got earnings on Tuesday. I'm not going to tell you to go out and buy a stock that's got earnings on Tuesday or Wednesday. You look at the weekly, I don't see the bullish convergence here. It's more sideways, but it's putting in a little base. It looks like it wants to go. But I'd rather see earnings first. I'll take this list of stocks and I'm going to stick them into my trade station, and I stick them into the advanced trading system. And then I basically watch my indicators. I watch the Q indicators, my Hgsi indicators, and then I've got a bunch of John Person stuff. Now, what do I really do? I load them in there. I've got 2 or 3 that I know I want to buy already. I'm going to preset those orders. I'll do one right now. And then I basically, every night I check, because I don't have time all day to look. So sometimes I'm just looking at the end of day results in there. So if I go back to that list, I also can do the same thing and put the list into Thinkorswim. I haven't loaded this week's in there, but I could always look at my buy watch there. And I'm going to stop it for a second. I want to show you something new that I'm playing with. Okay, so where I had left you for a second to update some stuff. So again, this is the list of stocks. I don't want to put it on that. I usually put it on. That's fine. I usually put it on a scoreboard view. Hence why I haven't sent this out to the purchasers yet. I need to clean it up a lot, but here's the scorecard. So I ranked them by a little bit by industry, by sectors here. You can see a lot of financials, which are the REITs, some technology. I'm not a big utility guy. Pattern Energy, for example. Why did I pick this one? I'm sure somebody there can tell me why. I've got sideways move, 2 kahunas, pocket pivots, mobile breakout from a squeeze, and I've got really nice bullish convergence on the PMC. If it only was not a utility, but it pays a 6.1% dividend. Now, I mentioned on the person webinar that I'm talking to other gurus. To be honest, based upon the response to what I've done thus far, I'm not sure I'm going to do it. But one of the things I've been looking at is bringing seasonality into Hgsi. But I don't control the price on these, so I make the introductions, maybe defray the cost on George and Matt's side, but I don't set the price of them. There is a new company out there. His name's Dr. K. And what Dr. K has come up with is using math to start talking about seasonality and other things. So for example, if I looked at Netflix, so first he came out with the indicator, and the white shows his projected indicator, and the blue is how it's actually following. So you could see how it was correct on predicting Netflix, and most people know that Netflix has good seasonality in first quarter. I've called it out, and hopefully some people have made money on it over the last few years. He uses a tool called a modified Laguerre. I'm not going to go into that today because it's really not the scope I want to use. But he's now come up with something that I like a lot. And what he's come up with is the ability, you have to have 12 years worth of data, and not all the stocks in this list have 12 years worth of data. But if you have 12 years of data and your average over either 20 days, 40 days, or 60 days is greater than 8%, then he fires off a signal. So these are stocks that are on my buy watch that have strong seasonality. Like for example, Every Holdings, EVERI, let's click on that. Is that the right one? Yep. Now let's go look at the chart. Every Holdings has super strong seasonality, and I know from this list over here that its 20-day performance is up 10% over 12 years, 21% over 60, and 26%, excuse me, 20, let me back that up, 21 over 40 and 26 over 60. So that gives me some built-in seasonality ideas. Unfortunately, most stocks don't have enough information to get me something, but that's very helpful. I think that's something we could develop, at least a 20, 40, 60 look ahead within Hgsi. I don't know how he creates the seasonality curve on the chart, probably similar to what was done in Magenta and Seasonality Trader. So if I have to pick something that I'm interested in buying, well, I got to tell you, I'm suckered by this one. Let me pull it up. So let me just work up how I'm going to handle Sabre Realty. This is a REIT. If I remember, they're in the ticketing and stuff. No, this is healthcare rather. Real estate investment trust, invest in real estate serving the healthcare industry. Nursing homes, rehab centers, assisted living, independent living. It leases properties to tenants and operators throughout the U.S. Let's think about it. What's the population in the U.S. doing? It's aging. What are we going to need more? Senior living space. Probably independent and maybe helped by Medicare for all. So it's on a pullback. Group strength is strong. I had a mobile breakup from a squeeze, a pocket pivot, and a kahuna. That's enough right there historically for me. Yes, I've got maybe a little bullish convergence, and yes, I have the person buy signal. Now, I would have known that anyways because I've historically would have gone into TradeStation and into my advanced screener module, and I'm sure I picked this one. Type in Sabre, S-A-B-R, or is it S-B-R-A? Maybe it's S-B-R-A. That's right, Sabre, S-B-R-A. Yep. And what I would have seen when I did that was it's pulled back into support. These are auto-generated support signals. Here I know it's got a mobile breakout and a pocket pivot, squeeze, PSAR turned green. It's got a force and a kahuna that are positive. I know that the PMC on the daily is getting better, weekly sort of sideways at best. Volume indicator is certainly trending higher on the daily, trending higher on the weekly. I have to be concerned that I have overhead resistance, and that's something I'm aware of. I do also notice on this that it pays a 10% dividend. So I now will open up this for Friday, and I got to pick what I would do with it. So it closed at 22.29. The high was 22.33. So I would probably want to make sure it moves a little bit in my favor before I buy it. So I want to put a buy signal here. I'm going to buy this. I didn't want it to be an arrow, but that's fine. If it goes to 22.35. Of course, you can't see that, but I can. I also want to do a sell signal. And where's the obvious sell signal? Typically, I like to go to the lowest bar in the last 4 dates. If there's a moving average there, I might play. That's the lowest bar in the last 4. And the low on that date was 21.19. So 22.30 to 21.19 is $1.11. It's about 5%. That's reasonable. So why don't I do that? I'm going to set my buy stop or sell stop, as the case may be, at the lower right here, which is 21, say 10. And I'm going to buy shares here, not buy options, because it's got a big dividend. And part of the reason why I'm buying this is a 10% dividend on a stock that's a growth stock. I like that. So that's how I would probably play that. And I'll put that trade in. That was one that I liked a lot. It makes no sense to me to use options to buy something that pays a dividend. I also liked American Barracks. I said gold miners were underperforming, that gold looked better. But here's one that actually broke out this week. You could even argue a cup, handle breakout. And you got a mobile breakout from a squeeze, a pocket pivot, kahuna. You also got maybe some bullish convergence, but I'm not going to call it on this. And on this one, I will do a similar operation. I would say the high of the day was 1973. It closed at 1893. I don't know if I want to put mine $1.40 away. Excuse me, it closed at 1972. So I'm going to put a buy stop around 1975. From a sell stop, this is problematic because the low of this bar is 1815. So that's $1.60 on 1975. About 8-9%. Frankly, if it gets below the 17, I want out. So I'm going to probably put my stop about here, which is 1850. It's giving it about 6%. And I may probably play this one with options. It plays a small dividend, 0.7%. On both of these, I will set a target. Since the market is starting to get a little bit more top heavy, I will probably set a target up here that's 1-to-1 between my risk. All right. And then I'll take half off when I get to the target. If I get to my target, I will take half my position off and I will raise my stop over here to break even. And then I will trail it up so that I can maximize my return. On that note, I'm going to say goodbye. Again, I'm sorry for all the negativity that I've created on the board. I really thought bringing an outside developer trader would make sense. Obviously, not everybody's going to agree with me, but I think I showed very clearly you don't lose anything by not buying it. You still get me on these webinars at a high cost of 0, and the charts still work just fine. Goodbye, everybody.